Last night we had the big news of the tariffs by Trump, so we're going to break that down and I'll try to make it as simple, straightforward as possible. So we have a blanket 10% tariff on all imports, all single imports to the US. And on top of that, there is 50% tariffs on countries like China, Japan, and the European Union. So this is a big game changer, but this gives us clarity on what Trump has now done. So we've got that idea. Now I'm just going to say that we don't have any news on Mexico and Canada. So we are still awaiting on what's going to happen there. So we're going to go into what the main countries are with tariffs. Obviously, I've got on the screen here. This is by Zero Hedge on Twitter. Trump did bring out the reciprocal tariffs like a scoreboard, essentially. So you can see there are a lot going on here. So we're not going to go through every single one. We'll just go through some of the main ones, especially the ones I trade, like G10s. So what we're doing now is waiting really to see what we're going to get back from the countries that have been tariffed, because this is very likely this sort of the escalation to a trade war, because I would be doubtful that this is just it and no one's going to reply, nothing else is going to happen. So I'm just referencing my Notion notes here, because there's quite a lot to discuss really. So there's a 10% blanket tariffs on all imports into the US starting on April the 5th. There are much higher tariffs coming on to the European Union at 20%. We've got Japan at 24%. We've got South Korea at 25%. We've got India at 26%. We've got Vietnam at 46%. We've got China at 34%, plus an extra 20% fentanyl related tariff, totaling 54% on China, which is big. It's a big tariff. The auto sector, there are 25% tariffs on all imported vehicles and auto parts. Smaller consumer shipments from China, such as Shein and Temu, there's no more $800 exemption. They will all face tariffs. Trump's reason, he says it's about reciprocatory. I think I said that right. Reciprocatory. Other countries have tariffs against the US, so America have been matching or exceeding those rates. The goal is to fix the US trade deficit and bring jobs back home. But as you're about to see, it's a little bit more complicated than that. So let's move over to the charts. So you can see the US dollar has actually fallen a lot. It's had a significant move to the downside here off the back of the tariff news last night. So we had a total of just under a 3% move at 2.82%. Now I heard some chatter on social media and within my own community as well, as why has the dollar seemed to have just dropped off a cliff? But it was essentially a risk-off move. We saw equities down, we saw the yen up. Why did the dollar go down? Well, the dollar, yes, acts as a safe haven, but not when it's a safe haven for itself. It can't do that. So when investors are fearful, yes, they will normally go to the dollar, they'll go to gold, they'll go to Swiss, they'll go to the yen. But in this case, the problem is the US. So they're not going to use the dollar as a safe haven in this situation. So we can see right here on these charts, the yen has had a massive gap open. So this move is a total of 3% on the yen, which again is a very large move in the currency markets. And the Swiss has had roughly 2.7, give or take. The euro has also had a rally off the back of this. So you can see again, we've had another just under a 3% move on the euro. So you can see the capital outflow and liquidity flows from the US dollar into other assets. And it's not just risk off assets such as the yen and the Swiss. We've got the euro doing very well. Gold also temporarily smashed through all-time highs here, made a new all-time high roughly around 3,167. Since then, we've had a large move down, but we'll get onto that in a second. We saw stocks down across the board. We saw the DAX down. We saw the S&P, the NASDAQ, the Dow. They all took a hit. So just quickly going back onto gold. Now, why did gold have a drop-off? And this is my thought process behind this. And I was saying this before we even had the tariffs yesterday on stream, that gold wouldn't be an attractive buy to me at that time. I was actually in silver. So that was, a slight hedge on my part for some risk, but anyway, that's by the by. But I was expecting downside on the precious metals. And the reason is because we've had such anticipation for these tariffs. We had a lot of uncertainty. Now, what we have is clarity. We know what Trump is wanting to do, or what he has done, what he's doing. Now, there is still uncertainty about what the replies will be from other countries, but we do have that little bit of clarity now. So some profit taking on gold is completely reasonable. I do still view gold as a bullish asset. I definitely won't be looking to start shorting gold, but this downside is definitely not unexpected and it's not a surprise in my view. So what we already know, or what we know by now, is that Trump is very, very happy, and he's very willing to completely disrupt global trade. And he's essentially just shifted it into the US's favor temporarily. Again, we do need to see what's going to happen next. So as for implications, these tariffs are effectively a tax on consumers. Import prices are rising, so the goods that consumers are buying are going to be more expensive, such as electronics, cars, food, clothing. Everything will be more expensive for the US consumer. Remember, tariffs aren't a tax on the other country. So, for example, if I'm shipping something to America, it's not me paying the tariff. It's the American company, the American consumer having to pay that tariff. Now, there are growth and recession risks here. Higher prices mean lower demand. People buy less. Growth is subdued or slows down. Big banks like Deutsche Bank are already forecasting that this could shave 1% to 1.5% off the US GDP this year, which is a large move down. There are some even predicting a US recession by late 2025 or even early 2026. So now we move on to what's going to happen next. So this is very likely the situation that we're in a global trade war. So other countries will retaliate. China, European Union, and Korea have already said they will impose tariffs in response. The risk turning into a full-scale trade war, similar to what we saw in 2018, 2019, but on a much, much larger scale and a lot more significant. So for currency traders or forex traders, the main things to pay attention to are US dollar losing its safe haven status because, again, it's coming from the US. The yen, the franc, the euro, and gold are all acting as safe havens right now, so they are still good long opportunities. And I mean, we just spoke about gold having its profit-taking move here, or its downside. But again, I'd still be more than happy to buy gold if we can start seeing some slowdown in bearish momentum here and see a little bit of a pickup by the bulls. So emerging currencies like Australian dollar, Asian FX could suffer if global trade slows. Possible Fed rate cuts this year or later this year if the recession risks are rising. So how can you trade these markets? I mean, it's been a very, very difficult 12, 18 hours really for traders. I mean, I've got whipsawed in and out of positions. It's been a bit of a mess, to be perfectly honest, and it's not been super, super clear on exactly what to do because it's not a case of we just seen a rally to the downside or a rally to the upside on anything. We have seen this whipsaw. So gold, silver had this initial strong move up. We saw the same thing with equities. Equities had a strong move to the upside, then the sell-off. So unless you were really, really paying attention, you were actively trading the news as it was coming out, you likely will have been either in some pretty good profit if you're holding positions in certain ways, or more than likely you've hit stop losses. So my approach at the moment, short term anyway, just for now, is essentially just selling the US dollar rallies. So if we do see the dollar start to pick up again and start correcting some of this move, I will still be looking to go short. That's of course as long as we can see sellers stepping in again, and we see bullish momentum slow, typical strategy stuff. The safe haven demand in my view stays the same. I mean, you guys should know I've been very long on the yen recently, so I would still look to continue yen long positions, Swiss franc longs, euro longs as well. And of course, gold longs are still a very, very sensible idea in my view. So another main thing to pay attention to is central banks. So what's the Fed going to say? What are the ECB going to say? What's the Bank of England going to say? What are the central banks going to do or say in response to this? Because of course, at the core of all of this, we are looking really at what central banks, obviously we've got a trade war, that's a separate thing, but I'm now looking to say, okay, are we going to see any deviations from central bank policy? Are we going to see any divergences there that we can capitalize on? So essentially what you would really want to be doing is playing defense in this market. You're not looking to be super aggressive. You're not looking to go heavily long into the stock market. So again, the NASDAQ, the S&P, the Dow, you would want to be playing these things like yen long, gold long. Just look for those safe havens and play on defense. This will be an ever evolving situation until we are, flatlined essentially. So all of the countries are in agreement with what the situation actually is. We've got the responses and we know what is happening. So for now, I think it's best to stay as safe as you can. Either just stay in cash. Remember, cash is a position. It's fine to sit in cash, or again, play on complete defense. We will be keeping you updated, of course, in our Telegram, in our Discord, and on YouTube as well. So guys, if you want to get trading education, you want real-time news and trade signals, feel free to join the Discord. We've currently got a 7-day free trial, or you can join the Telegram completely for free. Both links are in description. So thank you for watching. Drop a like and subscribe, and I will speak to you later.